Hello, Assalamu alaikum, students. How are you? I hope that you guys are fine and you are doing amazing preparation for IGCSE accounting. So I know that you have, you guys have been waiting for my video um for May, June 2025 mainly. So yeah, we are just going to start the paper one, variant two, May, June 2025. Okay, students. So we have this question paper, as you can see, and we are just going to start doing the question from the, of course, first one. We are going to start from the very first question of this paper. And as you can see that we have 1 hour, 15 minutes to complete this whole paper. Okay, so let's start. Hmm. First of all, we have the first question that Ricardo left his job as a machine operator to start his own manufacturing business. Why was he interested in his financial statements at the end of the first year of the business? Okay, first of all, the first one is that to ascertain the market value of the non-current assets. So, market value of non-current assets is not shown in the financial statements. So, this is not the right option then. Number two is to check if all the transactions had been recorded. So checking if all transactions were recorded is the rule of bookkeeping, not the main purpose of the financial statements. So that's why B again is not the right option. To find out about the job satisfaction among the workers. So job satisfaction is not measured through the financial statements. That's why this is also not the right option. D is that to see if the profit was greater than the previous earning. So D is correct because Ricardo left his job as a machine operator. So at the end of his first year of running his own business, he would naturally want to know that how much profit he made and whether this profit is higher than what he used to earn as an employee. So yeah, D option is the right option. Then we have the question number two, that how is owner's equity calculated? So basically, we know that how we can calculate it. There's an accounting equation we use, total assets minus total liabilities. So this is basically the right option, the A1. Total assets plus liabilities, this is not the right option. We know that how we can find out the capital. So basically, A option is the right option. Simple. Okay. Shula's financial year ends on 31st March. On 1st April 2024, there was a credit balance of $100 on Yasmin's account in the Shula's purchase ledger. What does it mean? Okay. So the purchase ledger contains, we know, account of the credit suppliers. So credit balances on a supplier's account means that the business owes money to the supplier. So it means that the $100 balance means Shula still had to pay $100 to Yasmin. So that is why C option is the right option. Then which document may be used by the business as proof that an invoice has been paid? So we know that a receipt is issued by the seller to confirm that payment for an invoice has been received. So it serves as an official proof of payment. Whereas if you see the credit note, it shows that a reduction in the amount owed. Paying in slip is used to deposit money into a bank. And petty cash voucher we used for small cash payments inside the business. So that's why D option is the right option. Okay. Then question number five, that Raminder maintains a petty cash book using the Impress system. The monthly Impress system is of $250 is restored on the first day of each month. In January, the petty cashier spent 105 and he received a refund of $15 from a stationery supplier. How much was given to petty cashier on 1st February restore the impressed? Okay, so at the start of the January, the petty cash has the $250. So how much cash spent? Cash spent was 105. So refund received the $15, which basically increased the petty cash. So net cash, how much the net cash will be? 105 remaining, and he received the $15. So it means that $90 remaining. So amount remained at the end of the January means the total amount was 250 minus 90. This is equal to 160. So amount basically needed on 1st February to restore the impressed of $250. So it means that if you just minus the 250 and 160, the remaining one is 160, but you need to impress the 250. So it means that we have to impress the $90 so that it will become 250. So the petty cashier must be given $90. Okay, next, the question number six is that which statement about the cash discount is not corrected. Okay. A is that cash discounts are given if payment is made within the time limit set by the supplier. So it's true because cash discounts are for early payments. B is cash discounts are shown as a reduction from the list price when goods are ordered. So no, it's not true because cash discounts are shown as a reduction. Cash discounts are given for early payments, not at the time of ordering. A reduction from the list price when ordering is called a trade discount, not a cash discount. C is that customer will show cash discounts given to them as the other income in the income statement. So yes, it's true because customers record the cash discount received as their income. D is suppliers will show the cash discounts they give as an expense in the income statement. So yes, it's true as well because suppliers record cash discounts they give as an expense. So that's why B option is the right option. Then the next one is the Zinningi prepared a trial balance. The total of the debit column was this, and the total of the credit column was this. So credit column is lower than the debit column. What could explain the difference? Okay. So as you can see, debit balance is given, credit balance is given, and the difference we can easily see. This is 2,25,750, and the credit column balance is 2,25,250. So the clearly the difference is basically 500. So it means that we must find an error that would increase the debit total or reduce the credit total by exactly $500. So if you check the option A, that the bank overdraft of 250 was included as a debit balance. So bank overdraft is a credit balance, we know. So if mistakenly entered as a debit, so debit will be increasing by 250 and credit will be decreasing by 250. So total difference is equal to 500, but this would cause a 500 difference. So it is wrong because in the trial balance only one side is added. So here they only say included as a debit balance, so not the double effect. So it means that its effect will be like on a debit side, it will be increasing it with the 250 instead of correct 250. So difference will be 500. So yeah, the correct effect is debit increase by 250. So the difference is 250, not 500. So that is why A is not the right answer. And if you see the B one, the discount allowed for $500 was included as a debit balance. So discount allowed is a debit balance normally, we know. So entering it as a debit is correct. No impact on the difference. So B is not the right option. Whereas if you see the C one, that purchases return for $250 were included as a credit balance. So basically, purchases return means return outwards are normally credit. So entering it as a credit is correct, no error, and there is no impact on the difference. So that's why C is not the correct answer. D is the sales return of 500 were included as a debit balance. So sales return of $500 included as a debit balance. So sale return are debit. Normally we know about it. So entering as a debit is correct, should not cause a difference. So, but if you see that they have asked that which could explain the difference. So only one option mathematically fits the difference, and that is basically the A, because treating overdraft $250 credit as a debit creates a 500 mismatch. So it means that the A option is the correct option. Next question is that Michael opened a suspense account when he prepared a draft financial statement. Okay. Michael opened a suspense account when he prepared a draft financial statement, and he then discovered the purchases of $68 had been credited to the purchases account as $860. Which entry was made in the suspense account when this error was corrected? Okay. So it's like correct entry for purchase of $68 should be that you should debit the purchases with 68, and you should credit the payables with $68. But the wrong entry was made. You just credited the purchases with the $86. So instead of debiting 68, they credited 86. So that's the wrong entry. So if you see that the correct entry should be debited 68, but the wrong entry they have done, they just add the credited the 86. So if you just find out the difference between 68 and 86, so how much the difference will be? So basically, if you see that the missing debit is 68 and the wrong credit 86, so the total correction needed is equal to 68 plus 86, and this is equal to 154. So the just to fix the account, we will debit the purchase with 154 and we will credit the suspense account with 154. So it means that the correct uh, answer is credit entry goes to the suspense account with $154. Next, we are going to see the question that Samir calculated that his profit for the year was $6,300, and he then found two errors. First error is that check for 3250 received from a carrot customer had only been recorded in the cash book. So correct entry should be that we should debit the cash and we should credit the receivable. So he recorded only the debit cash, and this affects asset only, not income or expense. So that's why there is no effect on the profit. Second error, discount, the total of the discount allowed column in the cash book, $300, had been credited to the discount received account. So correct treatment should be discount allowed should be expense and it should reduce the profit, and discount received it is the income, so that's why it should increase the profit. So, but Sameer wrongly credited the discount received income instead of the debiting in discount allowed me the expense account. So the error caused expense not recorded. So that's why profit will be overstated by the $300 and income wrongly increased by 300. So profit overstated by the 300. So it means that the total overstatement will be 600. So if you just the yeah 6300, if you just see, if you just add this 600 into the draft profit, that is 6300. So this will be 600. So 300 plus 6300 plus 600. Uh, Basically, okay, that's the overstatement. So we need to minus this 6300, 600. Yeah. So this will be 5700 answer. Yeah. Okay. Next question, that Mughals, yeah, my goals, I guess, maybe. Okay. Michael's cash book showed a debit balance of 4220, and he later discovered the following errors. First error is a check for $200 issued for the purchase of a office equipment had been recorded in the error in the office expense account. So the correct entry should have been debit the office equipment, non-credited with 200 and credit the bank with 200. But the wrong entry we have made, we just debit the office expense with 200 and we credited the bank 200. So bank is correctly reduced, so there is no effect on current assets. Office equipment, non-current asset was not debited, so the non-current asset are the understated by the $200. So here the non-current asset will be understated. NCA, non-current asset, understated by $200. Okay. Okay, and let's see the error too. That bank charges of $30 had been recorded in the cash book as $70. So basically he reduced the bank by 70 instead of 30. So that means bank balance is understated by 40. So bank is a current asset, so current asset are understated by 40. Current asset understated by 40. So it means that there in the non-current asset, there is it is understated by 200 and it is understated by like the current asset understated by the 40. So D option is the right option. Next, we are going to see the question number 11. Okay. So the question number 11 is, a trader was reconciling his bank statement with the updated balance of his cash book, and there were unpresented checks and the uncredited deposits, and bank statement did not contain any errors. He started preparing his bank reconciliation statement with the correct balance on the bank statement. How did he arrive at his updated cash book balance? So when reconciling the bank statement with the cash book, so we should start with the bank statement balance, credit balance, that what bank shows the trader owes to the bank, and we adjust for the timing differences. For example, unpresented checks or checks issued but not yet cleared by the bank. So we need to subtract, like we need to subtract because bank hasn't reduced the balance yet. That's why, and the uncredited deposits, the uncredited deposit money deposited but not yet shown by the bank. So we need to add the bank we need to add it. Why? Because bank hasn't increased the balance yet. So that's why the D option is basically the correct, by subtracting unbalanced checks and adding the unguaranteed deposits. So this is the correct answer. Okay. Then we are going to see the question number 12. Okay. Mary is a trader and she has a debit balance in the bank column of her cash book, and Mary has received her bank statement and needs to update her cash book to record the following items. First is a credit customer. Sam has settled his account using a credit transfer, and Mary lets part of her premises to the dentist, who has paid his monthly rent by standing order, and bank balance is not overdrawn. He does recording these items affect the bank balance in Mary's cash book. Okay. So if you see this one, the item one, so Sam, he is a credit customer paid via the credit transfer. So money received. So it means that it will be increases cash book bank balance. And if you see the second one, so here the dentist basically uh, pays rent by the standing order. So money received increases cash book by balance. So in the conclusion, both items are receipts. So they increase the bank balance in Mary's cash book. So D is the right option. Next question, that the cash book provides information for which control account item. Cash book provides information for which control account. Okay. So we know the cash book records all receipts and payments for cash and bank. So discount allowed is a reduction in cash received from a credit customer. So it appears in the cash book when the customer pays less than owed. So therefore, it provides information for the debtor's receivable control account. And A option like is the right option. But if you see the B one, so B is saying that the interest charge on the overdue account. So it usually recorded in the sales ledger, not in the cash book. Um, then C is irrecoverable debts written off. So it is like the irrecoverable is written off in debtors account control, not through the cash book. And the D is purchase return, so it is recorded in the purchase ledger, not in the cash book. So that's why A option is the right option. Okay, next we are going to see the question number 14. Yeah, question number 14. Okay. When Mark started a car repair business, he purchased a premises and equipment. 2 years later, he spent $5,000 on building an extension, $600 on the new equipment, and $750 on the repainting the original premises. So, by how much will the non-current asset increase because of these transactions? Ignore the depreciation. Okay. So, when calculating an increase in non-current assets, so capital expenditures that increase the value or usefulness of an asset are added to the non-current asset, whereas revenue expenditure like repairs, repainting are expenses not added to the assets. So it means that, as you can see, that first of all we have done the business extension, sorry, building extension, which is building extension is equal to $5,000. So this is the capital expenditure. So that's why we will be adding it to the in the asset. And the new equipment we purchased for $600. This is also the part of capital expenditure, so that's why we will add it. And repainting original premises, this is $750 amount, the $750 amount. So this is a revenue expenditure, so that's why we will not add it. So if you just add the 5,000 plus 600, so this is equal to 5,600. Okay. Then we have the next question. That on 1st January 2023, equipment was purchased for $50,000. Equipment is expected to have a useful life of 5 years and a residual value of 10,000, and the straight line method of depreciation is used. What was the balance on the provision for depreciation equipment account on 31st December 2024? So as you can see that when we purchased it on 1st January 2023. So it means that we need to charge the depreciation for 2023 and then 2024. So first of all, we need to calculate this annual depreciation. So how we can calculate it? There's a formula you can use, and that is the cost minus residual value divided by useful life. So cost was 50,000 and minus residual value is 10,000 and divided by useful life is 5 years. Okay, so let's find out the uh, annual depreciation. So that's 50,000 minus 10,000, this will become 40. So 40,000 divided by 5. So it is equal to 8,000. So 8,000 is basically the yearly depreciation, 1 year depreciation. But we need to charge the 2023 and 24. So we know that in the straight line method, the depreciation amount will be constant. So that's why we will be multiplying this 8,000 with 2. So the answer is basically 16,000. 8 multiply 2, this is equal to 16,000. So C option is the right option. Okay. Then we have the next question that Anjum rent two parts of uh, one second. Okay. Anjum rents part of her premises to Ajay for 6120 per annum. Okay, so this is a yearly payment. At the beginning of the year, Ajay had paid 2 months rent in advance, and at the end of the year, Ajay had paid 3 months rent in advance. How much rent was received from Ajay during the year? Okay, so we basically need to prepare the one account first of all. Anjum rent part of premises to Ajay, and we need to find out. Okay, Anjum rents part of her premises to Ajay for 6120, and we need to find out that how much Ajay received, how much rent was received from Ajay during the year. So basically, we are preparing account for Anjum then. So what does it mean? It means that this will be our income account. We need to see, like we need to prepare an income account then. So in the income account, we know that we use the APA mnemonic. It means that APPA, like this. A, if there is any accrued balance at the start of the year, you will write it here, and then P here. It means that every opening balance that's prepaid, you will be writing it here. Then again P. So if there's any closing balance which is prepaid, we will be writing it here. And if there is any closing balance which is accrued, we will be writing it here. And the amount which we received, so what will happen since this is your income account, rent receivable. Yes. 1 second. Okay. So rent receivable account. And we know that whenever we shift the income account, we shift the income account into the income statement. So what will happen? Your rent receivable account will be debited and the income statement will be carried. So income statement will be here. So as you can see that what is the yearly payment? Yearly payment is 6120. So we will be writing 6120 here. Yeah. And whenever we receive the amount in the bank from the, like whenever the Ajay will whenever the Anjum will receive the amount from the Ajay in his bank account, so it means that the income increases, so income will be carried and the bank will be debited. So bank entry will be here. So we need to find it out. This thing we need to find out. They are saying how much rent was received from Ajay during the year. So bank entry we need to find out. So at the beginning of the year, Ajay had 2 months rent in advance. Ajay has paid 2 months rent in advance. So this is the prepaid balance basically. Because like for the Anjum, this is a prepaid income. So that's why what we will do, first of all, we have to see what is the monthly payment. So if we just divide this with 12, so 6120 divided by 12. So the monthly payment is 510. So if you just multiply the 510 with the 2 months, 510 multiply 2 months. So this will equal to 510 multiply 2. So that will be equal to 1020. Okay. And then we need to multiply the 510 with the 3. Why? Let me tell you. First of all, just multiply it. 510 multiply 3. That's equal to 1530. Okay. So if you can see that the 2 months he paid rent in advance. So it means that this will be like this 1020 will be on this side. This is the opening balance because he paid at the beginning of the year and he paid for the 2 months. So that's why we will be writing this amount 1020 here. And then at the end of the year, like at the end of the year, he again paid at the end of the year, Ajay had paid 3 months rent in advance. So it means this is a prepaid income again. So we will be writing 1530 here. Now we know that this side is the heavy side, the debit side is the heavy side. So we need to add these two and we need to deduct the 1020. So we will receive this bank entry. Like we can easily find out the bank entry then. 6120 plus 1530 minus 1020. So that is equal to 6630. So C option is the right option. So 6630 we receive from the Ajay. Yeah. So this option is the right option, C option. Okay. Then the next question, that why does a trader write off money owed by a credit customer as an irrecoverable debt? Okay. So, So an irrecoverable debt, also called a bad debt, and it arises when a credit customer cannot pay due to the financial difficulty or insolvency. So trader writes it off to reflect the true value of receivables in the accounts. So it means that the D option is the right option. Why the A and B and C is not the right option? Because A and B La, they are saying that because a credit customer has not paid their account at the end of the trading period, because a credit customer has not paid their account by the due date. So this is a late payment does not automatically make a debt irrecoverable. So that's why this is not right. Option C is because the credit customer is no longer buying goods from the trader. So stopping purchases does not mean the customer cannot pay. So that's why the D option is the right option. Then the question number 18, that Shilpa's financial year ends on 30 April and 31st March 25. She wrote off a debt owed by Tahir as irrecoverable. So whenever we write off any debt, so we know that the basically the irrecoverable debt, it is like having debit nature because we always treat it like a expense, and we know that expense is having debit nature. So whenever we, so there is a journal entry which we need to make whenever we are going to write off the debt. So we need to debit the bad debt and we need to credit the customer, and customer is Tahir. So we need to credit the customer because we are not going to receive that money. So that's why the trade receivable means Tahir has decreased. That's why we need to credit it. So it means that the C option is the right option then. Okay. Then the next question is that Tony has prepared an inventory calculation statement at the end of the financial period. Okay. And we have the cricket bats, gloves, and etc. One second. Okay, so cricket bats is 600, cricket gloves cost is 600, and NRV is 750, and so on. So basically we need to find out the value of the tonnage inventory. Um, so as you can see that the cricket bats, what is lower? Lower is cost, so it means that we will be adding 600. And in the cricket gloves, what is the lower, NRV or cost? So NRV is lower, so we will be adding 320, 600 plus 320. Let me write it here. 600 plus 320. And then cricket helmets. So if you see cost and NRV, so cost is lower, so we will be valuing this on the cost. And this is 900. And cricket pads, this is say cost is 300 and the NRV is 250, so we will be valuing it on the NRV, whatever is lower. Yeah. So now we are just going to add it. So we will see the value of Tony's inventory. This is a 600 and then plus, there's a 320, then plus, then there is a 900, then again plus, and then the 240. So it's equal to the 2060. So 2060, yeah, A option is the right option. Okay, done. Next question number 20, that which statement is correct? Okay, let's see that which statement is correct. Hmm. Income statement is a part of the revenue system and shows the trader's financial performance. Um, so the income statement or a profit and loss statement shows the trader's financial performance over a period, including revenue, expenses, profit, and debt. So it is a part of double entry system, as all revenue expenses entries follow the double entry principles. Whereas if you see the B, so B is saying that income statement is a part of double entry system and shows the trader's financial position. So income statement does not show the financial position basically. C is statement of financial position is a part of double system and shows assets and liabilities only. So statement of financial position shows assets, liability, and equity, not just assets and liabilities. So C again is not the right option. D is saying that the statement of financial position is a part of double system and shows owner's capital only. So statement of financial position shows more than owner's capital. It shows the liability and assets as well. So that's why A is the correct option. Then we have the next question. The draft financial statements prepared at the end of the year, and it shows One second. Okay. Draft financial statement prepared at the end of the year of the first year of the trading shows draft profit is this, trade receivable is this. An amount $200 is to be written off as irrecoverable. A provision for doubtful debt is to be set at 1% of the remaining trade receivable. So what is the revised profit? First of all, we need to write off the irrecoverable debt. So as you can see, the trade receivable is 6,300. So we need to minus the 200 first of all. So let's do that. 6,300 minus 200. So it is equal to 6,100. And 1% of 6,100 will be 61, I think. Yeah, 61. So what is the profit? Profit was 24,000. So as you can see that the provision is 61. So we need to minus this. That's it. So 61 is basically the provision for doubtful debt. So it means that from the draft profit, which is 24,000, we need to minus this. So 1 second, 24,000 minus 61, which is the provision. So this is equal to 23,939, but we have to minus the irrecoverable debt as well. So that's why we will be minus the irrecoverable debt, because irrecoverable debt is expense and provision for doubtful debt is also expense. So when we deduct these two things, so your after that your corrected profit is 20,739. So B option is the correct option. Okay. Then see the next question that n okay n and mm, okay, Ann and Bob is in a partnership and share profits in 3 to 2 ratio, respectively, means the 3 is for the Ann and 2 for the Bob. Ann is entitled to a salary of 20,000 per annum, and there is no interest on capital or interest on drawings. So profit for the year is 75,000 and share of the residual profit was 24,000. What salary was Bob entitled to? Okay. So there's a 20,000 salary per annum for the Anne. So how we can do that? So we basically they asked that what salary was Bob entitled to. First of all, if you see that, let um just write it here. The total salaries is equal to the Anne salary plus Bob salary plus 1 second plus Bob salary. Okay, and how much? 1 second. Where is it? Okay, sorry. Yeah. So Anne is entitled to the 20,000 per annum, and we don't know that what is the salary of Bob. So it is basically equal to 20,000 plus X. We don't know about X. And we know that the residual profit is basically the total profit minus the total salaries. Residual salaries is equal to total profit minus total salaries. So we need to allocate first of all the residual profit according to 3:1 ratio. So let's see. Okay, so as you can see that the AND's residual profit will be 3 over to 5. And what is a profit basically? AND's shares of the residual profit was 24,000. So let's find out. I need to write the residual profit here. I just wrote the residual salaries. 1 second, let me correct it. Yeah, now it's correct. Okay, so let's see that what is the and share of the residual profit was 24,000 as we know, and Anne's residual share will be equal to 3 over 5 of the residual profit. Okay, so students, as you can see that we have the profit for the year, which is 75,000, and we have the Anne's share of the residual profit that is 24,000. And the 20,000 is the and salary we need to find out, and there's no interest in no interest in drawings and no interest in capital. We need to find out the Bob salary. So we know that the residual profit will be equal to uh residual profit. We know that this will be equal to the total profit of the business minus the partner salaries, minus the like whatever the total salaries of the partners. So residual profit will be equal to the total profit, whatever the total profit which company earns, and we need to minus the salaries from there, and then we will get the total residual profit. We know about it. So it means that the residual profit is equal to, we know that the total profit we just find out from the find out from the income statement, that is 75,000. So this is basically your total profit. So you will be writing 75,000 here. Okay, and then you need to minus the total salary. So we don't know what is the total salary for both partners, but we know one salary, and that is the and salary, that's 20,000. So we need to minus the total salary. So total salary is 20,000 and salary, and plus X means that the salary of the Bob, which we don't know right now. Okay, so it means that if you just minus the 75,000 minus 20,000 plus X, so your residual profit will be equal to 55,000 minus X. So that's your residual profit. We just find out the residual profit. That is 55,000 minus X. That's your residual profit. Okay, that's your residual profit. Now we know that this residual profit is shared uh, 3:2 ratios. And we know that what is the Ann's share of the residual profit. And we need to find out, okay, so let's write it here. So Ann's share will be equal to, we know that the 3 over 5, because the 3 is basically the ratio of Ann. So if you just add 3 plus 2, this is the total ratio of the whole business. So 3 over 5 will be the ratio for Ann's share. So if you find out the Ann share, so how we can find it out? Ann share is equal to 3 divided by 5, multiply the residual profit. Because whatever the residual profit is, we need to multiply this with the ratios, and we can find out the share of each partner. Residual. Okay. And this is equal to, we know that what is the Ann shares of residual profit? And this is equal to 24,000. Okay. Now 3 over 5 multiply the residual profit we just find out, that is 55,000 minus X. So let's write it down. 55,000 minus X, okay, and it is equal to 24,000. Okay. Now, since we need to find out the X, so 55,000 minus X is equal to, that will become 20,000 multiply 5 divided by 3. We will be shifting it here, 3 over 5. So this will become through 20,000 multiply 5 divided by 3, and it will be equal to, mm, it will be equal to 20,000 multiply 5 divided by 3. This will be equal to 40,000. 20,000 multiply 5 divided by 3. 1 second. 40,000. Okay, actually, I just wrote the 20,000 here. That's basically 24. That's 24,000. This is 24,000, not the 20,000. So if you just see that, if you just multiply the 25,000, 24,000, sorry, multiply 5 divided by 3. So this is the answer, 40,000. Okay, we need to find out the X. So we will be making the X subject here, and that is equal to 55,000 minus 40,000, and that is equal to 15,000. So basically 15,000 is the salary of the Bob. Next question is that what are the advantages to the shareholders operating in a limited company? Okay. Question number 23 is that what are the advantages to shareholders of operating as a limited company? First of all, it has a separate legal entity. So yes, private limited companies, they have their own separate legal entity. And it makes it easier to prepare a financial statement. No, basically, the financial statements of the limited companies are more complex. It makes it quicker to prepare a financial statements. Again, it's wrong. It protects the personal assets. So yeah, because in the private limited companies, you have the limited liabilities. So whenever the business will bankrupt, so the business will be liquidating its all non-current assets and assets. No, it means that the business will not be acquiring the personal assets of the shareholders. So 1 and 4 is the right option. Okay. Next question, question number 24, that during the year ended 31st March 2024, subscription received by club amounted 2,500, okay, of which 120 related to the next financial year. So it means that this 120 is basically for the next financial year. This is the advance payment we have received. So that's the part of the current assets we know. On 31st March 2025, subscription accrued amounted to 280. So it means that at the year end, there is some amount. There's some subscription which is $280. You can say that you receive the subscription, and 280 is basically the subscription accrued. So it means that this will be what entries would be made in the club statement of the financial position on 31st March 2025. So it is 280 will be the current assets. 280 will be the current assets because this is we earned this income but we didn't receive it. So it means that sooner or later we will receive this amount and the customer owes to us this $280. So that's why this is a part of current assets. 120 because this is not this financial year's income. So that is why it's not relevant to this year's income, but it means that it is relevant to the next year's income. So that's why that will be the part of the current liabilities because on $120 we don't have any ownership. So that's why the B option is the right option. Okay. Next question 25 is that the bank account kept by a sports club shows that the subscription totaling 2695 were received during the financial year and the figure includes arrears of subscription owing from last year, which is 145. It also includes an outstanding acknowledgements of the subscription. Um, it is $195. Okay, so what we have to do, okay. What amount for a subscription is included in the receipt in the payment account? So basically, in the receipt in the payment account, this is just like a cash book. And that is why the whole subscription which we receive, that will be the part of receipts. Because we received it, it's not the income statement. They are not talking about the income and expenditure account. So that is why 2695 is related to the receipts only. So we will be writing the whole 2695 295 in the receipts, not in the payments, basically in the receipts. So owing and etc. these kind of things, it's relevant to the income and expenditure account only. When we receive something extra and we that will be the part of your liability and etc. So it's relevant to the income expenditure only, not related to the receipt and payment account. So that's why D option is the right option. Then we have the next question that a tennis club sells refreshments on the match days and receipt and payment account is included the following. So receipt from sales of the refreshment is 2300, payments is this, wages paid is this. Refreshments were which were unsold at the end of the year cost 200. A bill for refreshment purchase for of 75 had not yet been paid. What is the profit from sale of refreshment to be included in the income and expenditure account? So these are the sales, these are the payments, these are the wages paid. This is the closing inventory. And this is $75. Bill refreshment purchase of 75 had not been paid. So, but yeah, this is again, we need to deduct it. So let's see that what is the answer. So 2300 minus 1400 minus 300 minus 1 second. Payments to supplier for the refreshments. It's not relevant to the income and expenditure account. Payments to supplier of refreshments is the part of the receipt and payment account. Okay, so let's just do it again. 2300 minus 300 minus 200 minus 75. It is equal to 2275. Okay, so let's check this again. Okay, so students, let's try to solve it with the proper format. Okay, so first of all, let's find out the cost of refreshments. So the cost of refreshment will be equal to the payments to the supplier. And then plus any unpaid bill, and then minus your closing stock. Okay. So as you can see that the payments to the your supplier, payments to supplier, that is 1400, and then unpaid bill is 75, and then the closing stock is equal to 200. So that's equal to 1275. Okay, and then in the step 2, we are going to see the wages, the total expenses. So the total expenses is equal to 1275 plus 300. So that is equal to 1575. Now we are just going to calculate the profit. So total receipts are 2300 minus 1575 minus 1575. So that is equal to 725. So this option is the correct option. Okay. Now next we are going to see the next question. Question number 27. Okay. So question number 27 is that a manufacturing business calculated the following amounts, and prime cost is this, factory overheads, work in progress, purchase of finished goods, and the work in progress for the closing year, and then what is the production cost per completed for the year ended 31st December. Okay. So we need to find out the total manufacturing cost. Total manufacturing cost. Total manufacturing cost. And that's equal to prime cost plus factory overheads, FOH. Let me write FOH only. And so how much it will be? As you can see, 360,000 is the prime cost. And then we have to add the factory overhead. So factory overhead is 114,84850. 114,850. And that will be equal to 4,74,850. 4,74,850. Okay. Now we need to address the work in progress. So cost of the goods sold manufactured is completed. So the total manufacturing cost plus opening work in process. Let me write it here. Cost of goods manufacturer. Cost of manufacturing is equal to total manufacturing cost, total cost, let me write a total cost because I just want to free the space, plus opening work in process, and then minus closing work in progress. So 4,75,000, sorry, 4,74,850 minus opening work in progress was, as you can see that opening one, opening work in progress minus closing one. Opening is 8890 and then minus okay. And this is 7940, the closing one. 7940. So that is equal to 4,75,000 4,75,900. So C option is the right option. Then the question number 28, that which items are included in the calculation of prime cost in the manufacturing account? Direct and indirect, no. Direct material cost and labor cost only. No, there are some other costs as well. Material cost and direct expenses. Direct materials cost only, no. Direct production cost only, yes. D option is the right option. A manufacturer work in progress at the start of the year was valued at 850. At the end of the year, it was valued as 10,200. This is the ending work in progress. This is the opening work in progress. What was the effect? Okay, cost of production. So since you have decreased the value, which is 10,200 as closing, so it means that your cost of production will decrease. And since this decreased cost of production will be shifting in the income statement as cost of production in the cost of sale, so it means that since the cost of production decreases, so that's the cost of sale is also decreases. So A option is the right option. Then we are going to see the next question. Question number 30. Gustav began a business on 1st January 2023 with 50,000 capital. He provided the following information for the year ended. Opening capital, additional capital, drawings for the year, and then closing capital. We need to find out the profit. Okay. So there is a formula which we use. So let me write it here. And the formula is opening capital plus additional one, .   . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . . and then minus the drawings. Let me add the profit as well. So we need to add the profit which we don't know yet, and then minus the drawings, and then this is equal to the closing capital. So opening capital is equal to 58,000. So let's write the 58,000 here. Then additional one is 200. Then profit we don't know. This is RX. Drawings are equal to 9880. And the closing capital is 60156. Okay, now let's calculate this. We are going to do the reverse working. Okay, so 60156. The drawings we supposed to deduct. Now we are going to add it because we are going to do the reverse working. This is 9880. Then we need to add the additional capital and opening capital. Now we are going to deduct it. Minus 200, sorry, minus 2000. Let me do the work again. This is 60156. Add, okay. Then again 60156 plus 9880. Then minus 2000. Then again minus 58,000. So the profit is equal to 10,036. Next question, we are going to see the following information is available at the end of the Savage first year of trading. Amount owed by credit supplier, amount owed to the credit suppliers. Okay. Credit customers. Total sales for the year are $220,000, for of which cash sales are this. What is the trade receivable turnover in days? Okay. First of all, we have to find out the credit sales. So credit sales is equal to your total sales minus cash sales. So that's equal to total sales are equal to 2,20,000 minus cash sale 24. So it means that the credit sale is equal to 1,96,000. This is credit sale. Now we need to use the receivable turnover ratio. The formula was credit sales divided by the trade receivables. So the credit sale is equal to 1,96,000 divided by The amount which is owed to the credit customer, that is your receivable. So that's 9,600. So this is approximately 20.42, 20.42 times. Now we need to divide this, sorry, we need to divide 365 on 20.42. So that's equal to 17.87, means approximately 18 days. Yeah. So this option, B option, is the right option. Okay. Now next one is question number 32, that which statement is the limitation of the comparison of accounting ratios for of different businesses. Okay. First of all, when we compare the accounting ratios of different businesses, so the limitation arises because business may operate under different conditions, such as different pricing strategies, different cost structures, different markets. So this makes ratio comparison less meaningful. So it means that the C is the right option. But why not the A, B, and D? So A is basically accounting does not include a value for workforce skills. So this is not a limitation of the ratio comparison. B, it is having the same accounting policy is not a limitation, it actually improves the comparability. Whereas D, that while a typical year affects analysis, the question asks specifically about different business. So C is the most relevant limitation. Okay, let's see question number 33. Malti has a trading business that has a bank overdraft and makes a profit. Why would the government be most interested in the financial statements of the Malti? Number A, to compile the business statistics. So basically, government are mainly interested in the aggregated business data to compile economic and the trade statistics, monitor all overall economic activity, and inform the policy decisions. So that's why somehow the A option is the right option, whereas B, C, and D, like they're talking about the individual property debts or repayment ability. So these options are usually interest to the business, banks, or and creditors, not directly to the government. So that's why A option is the right option. Then the next question, Vikram wanted to apply the principle of consistency when accounting for the use of his delivery van. What did this require? So basically, using the same method for depreciation each year, it is the principle of consistency. So in the principle of consistency in accounting requires a business to use the same accounting policies and methods from one period to the next, and this ensures the comparability of the financial statements over time. So in this context, for the delivery van depreciation method, for example, straight line or reducing balance method should remain consistent each year. But the other options are not correct, like A and B and C, because A and B, like the number of deliveries or repair costs, are operational matters, not accounting principle. Whereas C, providing the same amount each year is not required. It depends upon the depreciation method. So that's why D is the right option. Then we have the next question, 35. Benson wanted to compare his profitability with that of his competitor. However, the competition of his financial statement was significantly delayed due to the fire in the room where the files were kept. So what does this delay affect? Uh, so here the B option is most likely the right of the relevance of the financial statements. because relevance means that financial information is useful for decision making at time it is needed. So a delay in completing the financial statements makes the information outdated, so it may no longer help in the comparing profitability with competitors. Whereas the A1, the comparability of the financial statements. So this is about using consistent methods across periods or companies, not timing. Uh, and C is the reliability of the financial statements. So reliability concerns accuracy and truthfulness of the data, not the time. And the D is understandability of the financial statements. So understandability concerns clarity of the presentation, not the timing. So that is why the B option is the right option. So we just done with the paper.